Good evening, everyone. I hope you're doing well. I wanted to talk to you today about the US dollar. I think everyone's sort of forgotten about the possibility of the US dollar rising through 2026. We've seen silver, gold, copper all hit all-time record highs. We've seen stocks at all-time record highs. And a rising US dollar through 2026 would put downward pressure on other assets, and it's something to consider for our portfolio. So, firstly, we're looking at the DXY, the US dollar index, which measures the US dollar's value relative to other major fiat currencies. And there was a major low in the US dollar in 2008. And I would say since then, the US dollar has been in an uptrend. And we're looking at monthly candles here. Now, you might say this little, I would call that a false break to the downside. But even if you were to draw the uptrend using that line, you can see where we are today, starting 2026. If you were a buyer of this uptrend, the US dollar is right back to that buy level. And if we zoom in a little closer, let's go to a 2-day chart. I was talking through 2025, especially in the second half, suggesting that the US dollar it had had its sell off. It was forming a bottoming pattern, and it is taking a long time to play out. But I would continue to say it is still forming a bottoming pattern. We can see lower lows there. There was a little spike low, and then at the same time, the US dollar was making lower lows. We see the MACD and the RSI, the momentum indicators, making higher lows, so positively diverging. When used in conjunction with other signals, that's usually an indication that a bottoming pattern may be forming, sorry. And we can see that as well. There's a few ways you could draw a falling wedge there. For example, you could say this is the trend here, and that if we draw that line across, you can see the high there, the resistance breakout, and then previous key levels, support and resistance. These are your most important lines on the chart. And of course, the 100 level for the US dollar, a very key price level. And we could see its function as support many times before. And then, of course, broke down, forming a little bottoming pattern under the key 100 level. Once it broke out of this little bottoming pattern, we can see a double test there of the 100 level. And now all it's doing is returning to the scene of the crime to test the breakout. Again, this is pretty textbook sort of behavior. And there's quite a strong probability that it's going to find support here, return to the 100 level, maybe consolidate. And if you see it trading above with a 101 handle, which would be a key break, and of course a break above that level would be, for the US dollar, would be a positive sign for its potential rise. So if it's trading 101, 102, the bottoming pattern is likely complete. And just keep that in mind for your portfolios and for my portfolios for 2026. Cheers.